Hello, my name is Marcel Klinovic, the Butcher of Wall Street. I'm here with Dr. Marco Metzler. Dr. Metzler is the former Fitch ratings analyst and PhD economist, and he has demonstrated previously that the insolvency and coming bankruptcy of real estate developer Evergrande could trigger a global financial crisis. The developer, which either directly or indirectly employs around 4 million people, has accumulated over $300 billion in debt that cannot be repaid on time. Dr. Metzler and DMSA Ratings Agency expects investors to recover between 0 to 10% of their invested capital in the event of Evergrande's bankruptcy. Dr. Metzler, I think you've said in the past that assuming an average recovery of around 5%, international investors would immediately have to write off around $23 billion in the event of insolvency. In the worst case, some of the international investors we don't know today could then also face bankruptcy. Evergrande's bankruptcy hearing has been rescheduled for March of 2023. Do you have any updates or news in regards to Evergrande and the global macroeconomic situation currently?
Yes, I have certainly an update.
Great.
And actually, I will want also to talk about the bigger picture. So the global financial meltdown. Actually, we predicted this meltdown by publishing our report in November 21. With the default of Evergrande at that time, the mass media did delay the publication of the default, and with the bond buying of ourselves, we confirmed that Evergrande had defaulted at this time, and actually nobody was believing us, but we proved it. Yeah. And so actually, what we have foreseen at this time happened in 2022. So then later in February 22 and March 22, Evergrande did publicly default by not repaying interest and also principal of around 2 billion euros to international investors. They owe around 23 billion, which we have issued in around 13 bonds, and in addition the interest. So they officially default in February 2023, and since then the bankruptcy of Evergrande has been delayed. And so we have been trying to send Evergrande into bankruptcy, but however, it's very difficult. It was even almost impossible for a small investor like us to do it. We tried our best, but so far we could not achieve, because the liquidator did withdraw, or the lawyers did not do their job. So at the moment, actually, we hold a title against Evergrande, but we cannot send Evergrande into bankruptcy, because no lawyer or no insolvency lawyer is supporting us in filing the lawsuit in Cayman. So but what we have seen is that Evergrande has been sued for insolvency, for bankruptcy in Hong Kong, even though the headquarter is not in Hong Kong, it's in the Caymans.
Yes, sir.
So and this lawsuit had been delayed, I think, by political pressure in Hong Kong, and is now due for some months, and I think there will be no result. And I still think if international investors, big international investors, would join us to file a bankruptcy petition in the Caymans, it would be the best solution. But Actually, we cannot do this alone. We need support. We often ask for support, but nobody showed up yet. So,
It's
but
quite
never
the
give
struggle,
up the
isn't it?
hope. Yeah.
Yeah, absolutely. I would imagine it's quite the struggle dealing with such a, large amount of corruption between, Hong Kong, China, and the Cayman Islands. It's got to be nearly impossible to get support of, bankruptcy attorneys and judges when you've got a, multi-hundred-billion-dollar company that is insolvent, but still has a lot of companies and banks have a vested interest in them remaining solvent for as long as possible. As former Fitch ratings analyst, what would you say is the reason for companies like Evergrande and other Chinese real estate developers for pulling their bonds and their companies from the ratings agencies? What's the purpose of this?
Yes, because the rating agencies then have the obligation to declare bankruptcy or derating, and to avoid this, they withdraw the ratings from Moody's and S&P. So
Wow, talk about
just
crooks, right?
to avoid this, yeah. So actually, yeah, if Evergrande is not declared bankrupt, so banks or other companies can hold the bonds and the equities still with a historical value of 100 in their balance sheets, and so yeah, this is still possible. Yeah, and also the hedge funds are able to borrow money against this 100 in the balance sheet, and but yeah, unfortunately, it's yeah, there's a, I think this is also a systematic pressure not to have Evergrande bankrupt. So this system is not does not allow to have them bankrupt. Yeah. So
Yeah.
that's my theory now.
So between the
But
CC, sorry, go ahead. I didn't mean to interrupt you.
but anyway, but it was an important step for us to show that they have been defaulted. It was important to highlight that Evergrande was the first domino to fall in a kind of a financial meltdown scenario, which happened in 2022. We entered in the first and second phase of these financial meltdown. So, and so the second phase was then the Ukraine Russia war, which started in February. So the market, the equity market crashed by the invasion. I think it was around the 17th, or no, I think the 20th of February, around that time.
Mm-hmm.
The equity market crashed, and this was also the crash we have predicted. But then something happened because of that, because Europe and the USA didn't want to look weak against Russia and China, so they started to print money to support markets, not to have a crash like 50%, which was possible at that time, or was overdue. But they avoided the big crash so far in
So
just
far.
yeah, so far in just printing money. And this was the reason why we have seen quite of a decent decrease in equity values. So, but at the end of the year now, we have almost 20% loss in equities. And but then high inflation rates could not be denied anymore.
Yeah.
And then something happened that the Fed started to raise interest rates very quickly, and maybe because of political pressure. But at the same time, the quantitative easing, which they wanted to stop, was not stopped as planned, because they could not crash the markets. And so we have seen a high or quick rising of interest rates, combined with a still quantitative easing ongoing, and actually this is very bad,
Yeah.
and even the hyperinflation is now is not, you cannot avoid it anymore, because you raise the interest rates, and this is sending the economies into into a recession. It is sending it now into a depression, and you even have to increase the quantitative easing and then at some point in 2023, actually this will completely break. Yeah.
Yeah,
So
I completely agree with you on that.
yeah.
You know what, to talk on your point there for a second, I from what I've been seeing, we've had the worst year in equities and bond markets since like 1871.
Yeah, I also read this. Yeah.
That's crazy. You know,
Crazy.
it's 2022, about to be 2023 here, and we've had the worst year in, you know, over 200 years as far as equities and stocks and bonds goes. That is absolutely just sad. But I think you're completely right there in the sense that it's like the Federal Reserve and the central banks have their foot on the gas pedal and on the brake at the same time, right? They're doing a brake torque here, trying to raise interest rates, which has occurred at faster rates than ever in history, right? Previously, the Federal Reserve leading up to 2007, 2008, it took them several years to raise rates, only a fraction of what they have raised them so far. What do you see occurring with such a massive amount of quantitative tapering and easing happening at the same time via, you know, the Biden administration currently sending hundreds of billions of dollars to Ukraine, arguably our tax dollars arguably being used to, you know, be laundered and sent back to, you know, Democratic parties via FTX and other, you know, other forms of money laundering that we don't even know about yet. But what do you see happening with like the newest $1.7 trillion omnibus bill that was passed by Biden and the raising of interest rates happening at the same time?
Yeah, actually, you already have a banking crisis in the US.
Mhm.
There are unrealized losses of 691 billion US dollar in the balance sheet of US banks. I recently did a post on this. Yeah.
Wow.
And actually, what they did is to change the accounting principles, and now the bonds are held to maturity and valued at 100. But so
Oh,
the same thing with the Chinese bonds. Yeah.
so they're
Uh,
avoiding margin calls on this $700 billion.
yes, with banks. Yeah, US
Wow.
retail and investment banks. Yeah. So. But actually, this is just delaying the
Inevitable.
biggest crash ever will happen. Yeah, so
Yeah, and I think,
yeah,
and for people that are watching that are wondering why we're laughing, I think it's because it's just so ridiculous at this point.
yeah,
What else can you do?
yeah, yeah,
What else can we do other than try to warn people and explain the situation that's going on? But they have $700 billion nearly in losses currently that are being, you know,
yeah.
just kicked down the
It's
road.
10% of the market cap. Yeah, 10% of the market cap they're holding in unrealized losses,
Wow.
which they will not write down in 2022, and it will stay and will even get worse when the interest rates will rise further in 2023, and it will even get worse. But on the other hand, you also have now, not only in the US but also in Europe. I will point it out later. But in the US, you have flexible mortgage in the UK and the US.
Yeah.
I think you have flexible mortgage rates, and
Mhm.
so the mortgage rates they double or triple already,
Yeah.
and it's taking the money out of the pockets of people which had been already, uh, yeah. Could not save anything, and now the middle class in the US is going to be indebted, combined with the extremely high inflation rates on foods. Yeah, so
Mhm.
it's even 100% more you have to pay compared to last year on food.
Yeah,
and
easily.
inflation rates are kind of manipulated by for example, mobile phones have been much cheaper. Yeah, so you show an inflation rate of 7% in average, but on food you have 100%. So people have to first buy food and housing
Yeah.
and the mortgage rates, and then they can afford something else, and but they do not have the money. So actually the inflation rate officially shown is much higher
Yeah.
than
So what
7%.
you're saying is that the
Yeah,
CPI is a lie because it's
yeah,
being brought down via the reweighting, the
yes,
recalculation of the weights of the
yes,
items in the CPI, correct?
yeah,
So, for example, like televisions and cell phones have gone down in price because of lack
yeah,
of demand. That reweighting has increased their capacity, their influence on the actual CPI more so than the increase in high food prices and such, right? And in utilities.
yes. This is not only in the US, or also in Europe. The official inflation rate is 10%. Yeah,
Yeah,
compared to
official.
7% in the US, but because of the high triple gas prices, the same happened. The wait for TVs and mobile phones are such high. So in average, you have 10%, and this is really ridiculous. Yeah, lie to the people.
And people just eat it up, huh? Is it,
Yeah,
that really gets me.
yeah, they see it in their own pockets. So people cannot save anymore right now. They are going to take their savings. In Europe, you have a kind of a life savings product, so they cancel life insurance products, life savings products, and I think in the US also there's a run on canceling savings products to survive, yeah, and
I
not to
see.
get into indebtedness, yeah,
So
and
there's, sorry, go ahead.
yeah, and this will also put a pressure on banks and insurance companies, because they are holding these assets to maturity, which I
Oh,
earlier mentioned. But if the people are withdrawing the assets, they have to sell it. They cannot hold it to maturity. Yeah, and this will be a very big issue in the European life insurance industry next year. And my recommendation is, yeah, withdraw your funds as long as you can, but because the regulator will shortly prohibit it or limit it, the withdrawal of assets, because the regulators, they do not want to risk the banks and the insurance companies. So take your money out as long as you can.
so what you're saying is that there's basically a run happening on life insurance products because that's the first thing that people can cancel when they're not
Yeah,
able to
on,
pay
on, on
bills.
life savings policies, yeah,
Yeah.
which is quite common in Europe. Yeah.
Yeah, it's pretty common in the United States as well. And a lot of people have to, I'm sorry, I should say the insurance companies have to hold that money basically in their accounts as a one-to-one. You know,
Yeah.
they can't just not have it, leveraged in other fashions. That has to be a one-to-one. Uh,
So
it's crazy.
compared to the U.S. banking industry, where we use the German or the German and also European life insurance industry,
Mhm.
they hold of their clients' assets. They are short of 15% of unrealized losses. Yeah. So
Unrealized so
they,
far.
yeah, held to maturity. But if we see a wave of withdrawal, they get in real troubles. Yeah.
This is amazing information. I didn't have any
Uh,
idea about the situation happening with the life insurance policies around the world. I really appreciate you sharing this with us.
mhm.
What do you see going on here? Like you were talking about the adjustable rate mortgages, these balloon mortgages and stuff. Well, as they continue as the central banks continue to raise rates, Canada, United States, and Europe and Asia even, what do you see happening with these adjustable rate mortgages? Because, like, for example, discussing CPI and the housing market, Canadians have 53% of all their mortgages invested in these balloon mortgages. 53% of all Canadian mortgages are adjustable rates. What do you see happening with these mortgages as the central banks continue to raise interest rates?
So actually, these mortgages sold to actually taken by the middle class buying houses. Actually, they will default. It will be a real problem for the middle class. They will default, and they first have to buy the food, yeah, to survive, and to buy and to pay the expenses for the car and for the food. They will default, and then it will be a banking crisis, and these loan will be bought by specialists, and trying to recover these loans at a later stage. Yeah, and I think then there will be a state support to rescue these banks, just to not risk the financial system to crash. Yeah, and this will create even more
Bank runs.
yeah, it will be paid by just printing paper. Yeah? So,
Printing ones and zeros.
yeah.
What can you tell me about the Bank of Japan? Just recently, just a few days ago, the Bank of Japan had to hold an unscheduled bond buying program twice in one day. What can you tell me about the situation going on with Japan trying to save their dollar, basically?
Yeah, this is really worse. In Japan, already holds more than 50% of their own government bonds.
Oh,
They're holding their own. Yeah, so can you
yeah.
imagine? This is with Japan is already bankrupt.
Aren't they also
Yeah, yeah.
are they also the largest holder of United States Treasuries?
Yes, they are the largest holders of treasuries, together with China. But there are some rumors that China is dumping these treasuries, or have been selling a bunch of it recently.
Mhm.
And so actually, the Fed can only buy it themselves. Yeah, they can only buy it. And actually, it's quite smart by China selling it right now. So
Yeah.
yeah,
With everything going on with the Taiwan situation and
yeah,
Ukraine,
yeah,
BRICS Plus is currently trying to establish their own currency as the world reserve currency, right? So for China to sell off the United States treasuries, does it not force the Federal Reserve to add them to their balance sheet while they're trying to unwind?
yes. It's an obligation. They are in between. Yeah.
Between
So
a rock and a hard place, basically, right? They're
yeah.
stuck.
Yeah,
Wow, that's
and
insane.
also China is buying all gold, which is physically available in the markets, and gold is manipulated, was manipulated,
Oh
is
yeah.
still manipulated by selling it short, even if you do not hold it. Yeah,
Hmm.
and
Naked
yeah.
shorting gold and
Yeah,
silver and precious
but
metals markets.
gold has been stable compared to equities and bonds, so it was still a good investment in 2022, but still is manipulated, and once this is clear in the markets, and everybody wants to have tangible gold, physical gold, then it will skyrocket and go to the moon.
We're looking at a
Yeah,
moon situation on a lot of precious
yeah,
metals.
AMC and GME. We come.
Yeah,
Maybe we talk later about that.
I think.
Yeah, and what we see very soon is that tangible gold, physical gold, will trade with a premium to the official price, because now you wait 3 months to get the tangible gold for the official price,
Mhm.
and there will be players, they want the gold now, and they are prepared to pay a premium. We will see this very soon.
I think it's only a matter of time as well. You've got
Yeah.
an absolutely great point. And speak to your point, precious metals are being traded in dark pools almost exclusively to the tune of 96 to 98% by the world's largest banks. I think that's probably got a lot to do with some of the precious metals manipulation. And also JP Morgan was just fined billions of dollars here for manipulation of the precious metals market, or weren't they, for spoofing the market between 08 all the way through, you know, the late 2010s. That's a really interesting
but I think the central banks play the game now.
There's a reason that they continue to buy it up. I've shown the Bureau of Labor Statistics and the Federal Reserve's the documentation showing that the precious metals contracts are being purchased, and precious metals themselves are being purchased more heavily than ever by the central banks. Do you think that they're currently trying to store it up so that they can issue a gold-backed or silver-backed central bank digital coin in the future?
No, actually, they are preparing a digital currency worldwide. All central banks are introducing it, and it may be introduced in 2023. But it's they cannot afford to back it up with any metals. It's not possible. But they will introduce an e-currency. And with that e-currency, actually, they can even put an expiry date on your money to spend it. So it's a full control what they then have over the people. So actually, the e-money is not something good. No, it's not. So,
not at all. And it's basically going to be like a one world currency, right? Aren't all these governments going to use the same one world currency with just different names in different countries? Is that a safe assessment? Does that sound like what could possibly happen?
Actually, the dollar is still a strong currency, even though they are printing an insane amount of dollars every day. But as long as the dollar is the world currency, it's a tendency to do it connect it with the value of the dollar. But there are other developments in Russia and in China, and also in Saudi Arabia,
the BRICS plus countries,
to challenge the dollar's role as a world currency, and more and more countries are accepting also other currencies.
That's incredible. I wanted to circle back to the situation we were just discussing regarding regarding actually Janet Yellen, and she stated to us, actually testified in front of Congress in September of 2021. She was testifying in front of Congress regarding the CARES Act. And Janet Yellen advised Congress that the top two threats to financial stability in the global financial sector were, number one, stable coins, and number two, over-leveraged hedge funds. What do you see the situations? What do you think in regards to the situations we've seen recently with the various stable coins and other cryptocurrency exchanges and coins that have been going bankrupt and defaults, having a sort of a domino effect there with over-leveraged hedge funds and situations like the life insurance and housing crisis that we could potentially see here in the very near future happening in regards to over-leveraged funds and banks and basically companies that are naked shorting precious metals, AMC, GameStop, and many other companies. What are your thoughts on that?
So actually, the leveraged financing of these investments is the major threat and will break the system. So the issue with the crypto is that most of the crypto coins are backed by nothing rare exceptions where we have stable coins which are really backed by government bonds, but now the government bonds have also huge losses. So
Oh,
yeah, so it's not a good business. So I think to the stable coins backed by tangible assets, they will be a safe haven for all people to save their wealth in 2023 and with ongoing financial meltdown. And so I will come later to what we did in the meantime on creating this opportunity. But I think we, as we see the third or even the final stage of the financial meltdown, there will be no other chance to save the money just to go into gold, tangible assets, or if this is not possible because maybe gold trading is prohibited, then you can go into reliable crypto coins which are backed up with physical metals.
that would be the opposite of current, pegged stable coins like Tether and such, right? That just happen to print their own money and don't actually have any backing to them. Is that correct?
Correct. So Tether has also an accounting problem.
An accounting problem?
They have bought these Chinese bonds, everybody knows, and they still have it at 100 in their balance sheet, as now as the other US banks doing. As soon as they have to change to market value accounting, you will see the black hole in their balance sheet.
So we're seeing a situation that's much greater than we ever saw with Lehman and Bear Stearns back in 2008.
You cannot imagine.
We're talking about it. That's right. It's unquantifiable, isn't it? It's unimaginable.
Yeah. So and there's a lot of resistance, not to punch the bubble and to let it crash. Yeah. So this is also the reason why the hedge funds which are shorting AMC and GME still have not got their margin calls. So, but keep holding, please keep holding.
Time in hands.
Believe in your powers. Keep holding. Somebody has to be a force against these people and just keep holding. Yeah. So this
I
is
agree. Retail is the number one threat.
There. Please keep holding. Yeah.
Thank you, Dr. Metzler. Yeah, I think you're right. Apes are the number one threat to the current situation because they want to get out of their short positions. They don't want, retail to hold precious metals and meme stocks. And that's why these large banks, institutions, and hedge funds and family offices have all spent so much money to spread mainstream media fear, uncertainty, and doubt in retail, and even so much as diminishing and trying to be diminutive of retail investors in their choices here. So the capitulation that they've been hoping for has not yet happened, and I think that's one of the greatest problems that they're seeing currently with their over leveraging. What do you think? Once we've got this financial collapse, which is basically inevitable at this point with all the situations we're seeing, what could we do as far as like what could we do as far as like getting our hands on gold and silver? Will it be too late? Will we be able to purchase any sort of assets that are backed by gold and silver for physical delivery? Have you been working on something like that for us?
Yes, so far gold and silver trading and precious metal precious stone trading is not prohibited yet.
Not yet.
So, not yet, but it will be. So and now you still can, even though you wait 3 months for physical delivery, so you can do it your own. But once it's prohibited, actually you need to do something else to buy it. and we will offer a solution in 2023. But let me just come back to another scenario which could trigger the final phase of the global financial meltdown. And this is the invasion of Taiwan by China, which could happen in 2023. And if it happens, then this would start the final phase of the financial meltdown. And then even the dollar could break after the invasion. Yeah. So it's likely to happen, but it's hard to predict. Yeah. But I just want to let people know, if this happened, then you should be prepared at that time.
Yeah, we've heard high-ranking Chinese Communist Party officials telling Xi Jinping and stating that China should invade Taiwan before the semiconductor companies can move their operations offshores to the United States. Is that why you think that they might be in such a hurry to?
Yeah, actually, they are buying gold in an amount you have not seen before. They are reducing the U.S. treasuries. They have seen what happened to Russia, and actually they are preparing. They want to get independent from any sanctions imposed by the US. And then if they have achieved it, it's very easy then to push the trigger and to invade Taiwan. Yeah.
Yeah. So when China positions themselves to where the sanctions against China from Biden don't affect them, they'll be in a better position to take Taiwan.
And they are also internally in a big pressure to show strength, because the real estate sector, with the default of Evergrande, and as predicted from us, all other major real estate developer defaulted, and it had also impact on the banking system, with a lot of bank runs happened in 2022 in China, and a lot of riots. Yeah. And this has been stopped by the government, just imposing the COVID restrictions, which we now had to release. And now actually they have to show something else to the public to be, but to show their weak side. Yeah. So and this could be the invasion of Taiwan. Yeah.
So it's the further weaponization of COVID by governments and central banks here.
Yeah. So in China, they recently last month they closed everything down, and there had been a lot of pressure then, and they reopened it because the pressure was too high.
Too many riots and people going absolutely crazy over it. Wow.
So the situation in China is extremely. They are now extremely weak economically, and also there the numbers are faked. There's a depression already ongoing.
Yeah.
But
so much like the United States, their GDP and job growth numbers are a lie.
Yeah, of course.
It's a currency war. It sounds like it's a currency war. The multipolar currencies going around, and we're no longer a unipolar world at this point, from the sounds of it. Okay. Yeah. Well, what are your thoughts on?
But unfortunately, it has to, everything has to crash. It's no way back. Yeah. So unfortunately, everything has to crash, and it will be a reset, but it will not be a reset like predicted by the World Economic Forum. So it can be a good thing, but first we have to face the consequences of the years where we have done wrong, or the world has done wrong. But actually, the people out there they have the power. They can decide. So
retail has the power.
Retail has the power. So
I like it.
Apes, do not give up. Okay.
All that matters basically is that we're properly hedged, and put our money in smart places and tangible assets and such, right?
Yes. So put it in tangible assets, prepare for food prices, and yeah,
And prepare for the bank runs.
hopefully it will not be like the apocalypse, but
Yeah, I think these rich guys enjoy being in power, so they'll probably try to stop just short of apocalypse.
yeah.
I think you're probably right on that.
But
Oh, this has been great.
it will be even worse when we have seen in the 20s. Yeah. So, but you
So
still can prepare for it. Yeah.
a lot of people, sadly, the vast majority of people that are uninformed, because the majority of people are uninformed, are going to be, hurting in a bad way. And a very select few percentage of people that are properly hedged are going to be filthy fucking rich. Is that a safe assessment to say?
Yeah.
Yeah.
But
That's my belief, at least.
at one point, you have to go out of paper.
Oh, yeah.
If the market goes down, you have to find the right point to
Mm-hmm.
go out of the paper before the system is crashing and go into tangible assets.
Yes, sir. When the global financial collapse occurs, what happens to those bonds, those Evergrande bonds, and the hundreds of real estate developers and the life insurance companies and everything else that's going on? What happens to those bonds that are currently being seen as 100% collateral of their value, historical value?
Of course, they have to be written down, but if the currency is collapsing, so and the hyperinflation, if you have or either the currency is collapsing and we have a new system, or you just inflate it out, so it's just
Venezuela for the
one
world?
egg will be $1 billion, and then it's no big issue to repay the debt. Yeah.
I hope not. Yeah. And what do you think happens to these over leveraged banks and hedge funds and family offices when all this bonds collapse and are written down to $0?
Actually, they will go bankrupt, or
That's music to my ears.
they will go bankrupt, or if an egg is $1 billion, just have some eggs, yeah, in their balance sheet.
Have some eggs on their balance sheet. I love it. That's great. Well, Dr. Metzler, this has been a great, very educational and informative discussion. Is there anything that you'd like to add?
Yes, actually, I set up a business in Dubai, an NFT marketplace and a gold trading company, and so we will be able to make available to people NFTs on gold, so you can buy your individual piece of gold with a serial number. You definitely know which piece of gold you own, or be part of a bar of a 1 kilo gold, actually, and it's safely stored in Dubai, in the DMCC, with Brinks. This is one thing I will be live in the first quarter of 23.
Mm-hmm. Oh, great! It's coming in the 2023 and early 23 is what you're saying?
Yeah.
Yes, nice.
It's hard to announce it, and then but I think in the first quarter of 23, yeah. And then we will create a kind of a security token, yeah. So it's a fully regulated security token, and this security token invests into a security which is fully backed by gold.
I love it.
So you have the two worlds. You have the investment world. You are fully regulated as a security, yeah, and you are regulated as a security token issuer, and yeah, and so yeah, and this is a solution I would like to offer worldwide, in different locations. So for the US, I'm issuing out of Grand Caymans.
Nice.
For Europe, I'm issuing out of Switzerland and Liechtenstein, and for the rest of the world out of Dubai. Yeah.
Oh, I think that's fantastic, because
Yeah.
I personally have been interested in something similar through, like, for example, PSLV, right? Sprott Physical Silver Trust. But I also don't trust that the Canadian government and the Canadian Royal Mint is going to give me my silver when I demand it, when the global financial collapse is occurring, because I don't think that they're properly leveraged, or should I say, I don't think they have the one-to-one backing of their, precious metals to all the paper out there, which we know is the case. So I very much look forward to buying something,
So
such as
our securities are also a paper, but you have the right to pick up your gold in Switzerland or Liechtenstein or Dubai.
But they have one-to-one backing, right?
Redeeming the paper. Yeah.
Yeah, but there is actual one-to-one backing, right? If I go to,
correct,
it's going to be there. That's what I like to hear.
It's going to be there, and
I don't have that same faith in, the Canadian government or the United States government when they start taking people's precious metals, that they're actually going to deliver my physical silver and gold. So I'm really glad to hear that. Thanks.
I do not expect a run now on these products, but I want to have these products ready actually when the gold trading will be prohibited, or when Tether is collapsing. Then people will look for something else, and we will provide it.
And that's actually it's a huge joke, in my opinion, how many people still think that Tether is a good idea. Like, so many people still invested in Tether, and like you said, they're backed by, Chinese junk bonds and a bunch of ones and zeros that they created, that they printed out of thin air. It's the biggest Ponzi scheme to happen since the creation of the fiat, and it's absolute insanity. Thank you, Dr. Metzler, for sharing that with us. I look forward to doing that, and I'm definitely going to be hopping on that train and getting some of your secure, your secure tokens there for one-to-one backing on some silver and gold products, because I would much rather have it held somewhere safe outside the United States, outside of Canada, where I don't have to worry about the government refusing to give it to me, or, causing other issues and trying to take my precious metals. That's the last thing I want. So I think it's a great idea. Thanks, Dr. Metzler.
Good.
Oh, thanks again, Doctor. Is there anything else you'd like to add before we go?
So yeah, thank you very much for supporting me, and I will continue to speak out the truth. Actually, we have to stand together to make a force. And so apes, keep holding and fight against, and you are right.
Thank you, Dr. Metzler. Really appreciate you.
Thank you. Bye-bye.
All right, have a great day.
J Squad.
Gonna be so goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you? Cowboy.
give me the fucking money.